look, I say this every quarter, but what the heck just happened with the stock of Hasbro? It's either feast or famine for these guys. This is their gigantic toy maker that I've liked so much. Last time, Hasbro knocked it out of the park. This time, they whiffed. Stock got hammered, down more than 16% today. We got to look into this. Now, last time, we got the sense that they'd finally gotten over the collateral damage from the Toys R Us bankruptcy. That was a terrible, disruptive influence. This time, they got hammered by the tariffs on toys made in China. Hasbro posted a major 37-cent earnings miss off a $2.21 basis with a substantial revenue shortfall. While Hasbro's licensed brands did very well, and there I think one of the toys affiliates with Disney, including Marvel and Star Wars, every other division was weaker than expected. This was a brutal quarter, and you get the sense that the trade war is really making life difficult for this fabulous company. It doesn't help that Wall Street's very skeptical of Hasbro's Entertainment One acquisition. They're shelling out $4 billion for a bunch of brands, including Peppa Pig and PJ Masks. So what do we do with the stock now that it's been just crushed? Let's check in with Brian Goldner. He's the chairman and CEO of Hasbro, who has the intestinal fortitude to speak to us every quarter during good times and bad. That's one of the reasons why I like him so much. Let's figure out what's happening. Mr. Goldner, welcome back to Mad Money.
Hey, Jim. How you doing?
Well, Brian, I got to tell you, there's a part of your conference call where you actually describe what it's like for you and a retailer given the tariffs. I know that the analysts got it. I think that if you explain it a little to our viewers, they will know that this had to do nothing with how great Hasbro is, but everything with the way the toys are bought and sold in this country.
Well, we set an objective this year to get back to growth. You mentioned Toys R Us, and we're getting back to growth. Year to date, we're up 5%. We said we would turn our European business around, and we're doing that. Our international business was up 4%, absent FX, with strong growth in Latin America and Asia Pacific. And then we've talked throughout the year how tariffs could have an impact, whether or not they were deployed or enacted, because of the way we go to market using an asset-light system with our retailers. In essence, our retailers ship in product on a direct import basis, and we ship in product domestically. As tariffs are being considered, and just through the third quarter, we saw several times conversation, communication, and elements that would say tariffs were coming. Our retailer canceled those direct import orders, and then we brought them in domestically, those same inventories, except the inventory is sitting in Asia waiting for a direct import pickup, and we have to bring it in domestically through our supply chain. So in July and August, we saw shipments down. In September, we saw shipments rise appreciably, and our supply chain, working with a third-party provider, an asset-light model, we weren't able to bring in all the product that we had intended to bring in, and we continue to work through this process. Going forward, after fourth quarter 2019, our teams, like we always do, address these issues in real time. We have a way to go forward with our retailers where tariffs, whether they're enacted or not, will not have an impact on our business. But in the short term, it did have an impact, and we could see it in our business. We saw it in a reduction in our revenues and an increase in some expenses, particularly around shipping and warehousing. And that's what we were describing today.
I mean, to me, it made perfect sense as someone who's been in business and watched my dad sell toys. I know that this would be something, it's like a second analyst horribless. I mean, you're probably the company that's most at the front line, but I like what you said about September. I like the progression. Can you catch up, fill the order September, and still hit Christmas strong?
Well, look, we've said that we've come out of the gates into the fourth quarter strongly. That our POS is showing great growth. We have a number of amazing initiatives coming. Frozen 2, Disney's Frozen 2's in theaters shortly. We launched on October 4th. Star Wars is launched on October 4th. We're seeing very strong growth there. Our Nerf business is off to a very good start as we launched Nerf Ultra. We're seeing a number of initiatives around For Real Friends and Cubby. Our Play-Doh business is up year to date, as is Transformers, Monopoly, and Magic the Gathering. So we have a number of new products coming into the holidays. We said we believe we can grow in the fourth quarter. And as we go forward, we will get through this issue related to tariffs.
All right, so Brian, how much is your company's bottom line or the consumer's bottom line going to be hurt by what President Trump's doing?
Well, look, I think the way to look at it, we're in an engaged conversation, and we want to continue to ensure we can bring great products and play experiences to consumers all over the world, and we're doing that. we want to ensure that we're bringing those great high-quality products at the best possible price. But if tariffs are enacted, we're going to need to pass on those costs to our retailers and to the consumer. We hope that it doesn't happen. The prospect of it happening has interfered with our supply chain in the short term, but longer term, the teams are already working on great plans to mitigate that and then to put it behind us, as we've done so many other issues related to the changing face of retail. Now,
one of the things I love about what you're doing is that we used to look at your business as a one-season business, one quarter, frankly. And the other quarters, we used to come on and say, well, look, we know they're not any good. What can you do? With the addition of Entertainment One, with the thought about storytelling, you have gotten away from episodic and are going for traditional quarter-to-quarter strength. When will people realize that that is Brian Goldner's legacy?
Well, part of it as well is that we're going to add a number of Hasbro-owned IPs and storytelling, from the family brand side, which is preschool, to the adult side for brands like Magic the Gathering and Dungeons & Dragons that enjoy incredible success and yet are only known to about half the world. So as you tell stories on great platforms, you raise the prospect for those brands, and you take those brands out around the world. So also, as you look at those brands, Hasbro-owned IP, they make more in operating profit. We can generate consumer products. We generate toys and games. We generate digital games. And so our brands are more profitable than our partner brands. We talked about that a lot in the quarter. As our partner brands grow, it's fantastic. We want to support their brands, and we certainly have treated their brands like our brands. In fact, we prioritized their brands for this fourth quarter as we had issues getting through the domestic supply chain. And yet we don't make as much money there. So as you build a business in marriage to E1, you're able to bring more Hasbro IP along with our partner brands to the marketplace globally. And we think that's a winning solution.
One last question. Do you think it would help or hurt shareholders if you withdrew guidance until this turmoil is over?
Well, we don't give guidance. In the beginning of the year, we talk about our belief in the year. And so we did. And we said we could return to profitable growth. We also talked about the prospect of tariffs and what it would create. In our second quarter, with our great results, we still spent a lot of time. Deb Thomas, our CFO, talked about what tariffs could represent, both the deployment as well as just the avoidance of tariffs as it would pertain to our supply chain. So we've tried to give people a lot of description. I just think people needed to understand in real time what it meant, but also that it's a short-term phenomena and that we're going to move past this as we have other challenges that have been in front of us. We have a great team, and they're ready to go.
Well, I'm convinced you're absolutely right, and that's why, once again, I'm so glad you came on. That's Brian Goldner, Chairman and CEO of Hasbro. I talked at the top of the show about where you can make a lot of money in this market. How about buying the stocks of high-quality companies that just get completely hammered for nothing that had to do with this excellent team that Brian Goldner runs? Hasbro. Mad Money's back after the break.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.